Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood from Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
And Jim, thanks as always for having me.
Tim, I just talked to Eric Haddock, who's another cycles guy, and he said he feels the equity markets are in a topping process and it could be a different story at the end of the year. What's your take on that?
You said in equities he's seeing a topping process?
Yes.
I agree. I don't know what degree he's talking, but let me briefly say that all of last year we watched I guess you would say the higher level topping process take place, right? I mean, we literally watched it all year unfold and talked about it throughout the year. And that's still in place. We declined obviously into December, and now since then we've seen a bounce. A lot of people think that, that bounce is, it's back, it's over, the decline is done, and everything is great. But I don't necessarily think that's the case. I mean, in my work, I think that higher degree topping process that we saw in, last year trumps, if you will, no pun intended, but trumps this rally. And I think this is counter trend. I think it's an extension of the topping process or a part of the topping process. It's like it should be a retesting. Now, how long it lingers, I think, is another thing. But we're in a technical window of opportunity here, or getting into a technical window of opportunity, where we could see this counter trend intermediate term bounce begin to roll. And it's a test. I mean, as you move in, we've talked about that before too. You go through an intersection, doesn't mean you have to turn, but it's an opportunity to. And we're at that technical juncture, entering that technical juncture where that opportunity is there. And, but regardless, I do think that this is counter trend and that the higher degree top is in place and that topping process is in the making, and that lower prices overall in equities are probably in the cards.
Now, of course, it's always the length of how long this process is going to take place that people ask about.
I know. And one of the problems with this entire, bubble, I guess you would say it's a byproduct of the bubble, or part of the environment that we're in, is that everything is taking way longer than imagined. And like I said, you have to look at it, or at least the way I have to look at it through my eyes from the cycles perspective, is that when we move into these cyclical junctures where there's opportunity to turn, you have to understand that opportunity for what it is. Is it an opportunity for just a low level degree turn, or is it the opportunity for a higher degree turn? And then once the turn occurs, then evaluate it for what it is. We're, like I said, we're moving into an opportunity. If it bites, I don't know, but ideally it should. I mean, it's an awfully risky window that we're moving into, and if we get an intermediate term sell signal, then we'll know that it's begun to bite.
Now, a question somebody had for me is, with U.S. equity markets going up, is some of the money for that market coming from Europe because investors there are freaked out about Brexit?
I don't know. I don't look at that sort of thing. What I look at is purely technicals, which is the charts, the cycles, and the related statistics in what I do. But, some of the European markets, like, the stocks, 600, and even looking at the Canadian market, I was looking at it a little bit before we came on the air, and, it's had quite a nice bounce too. So everything has been in these counter trend advances. Even looking at the Chinese market, the Hang Seng, and some of these markets, everything has been counter trend. So it's all kind of moving together. So I don't necessarily, I don't know. I can't say that, the money flows are coming from one source or the other because it's all pretty much bouncing together.
Now, some people have the theory, because we've had quite a correction, that it was enough of a correction to take the bubble out of the market and it's full steam ahead. What's your opinion on that?
I don't think so. Not at all. I mean, that's really somewhat laughable. I think the question is, and I wrote this in a letter, it's in print in one of the update, or one of the research letters. The question is, can they reinflate the bubble? And I say reinflate, maybe that's even the wrong word, because that sounds like you did take the bubble did relieve itself, and that's not what I mean in that comment. Can they, in other words, can they keep it going? Because it did not deflate. I promise you it did not deflate. When it deflates, it will be no question it deflated. So the question is, can this little pause here, can it resume? And that's part of the test here. I don't know. I don't think so. I think that test actually is not coming from the bounce out of the December low. I think that test is going to come from a lower level as to whether or not they can keep the party going or not.
Now, last year, sell in May and go away seemed to work out. This year, so many people have told me they expect things to get harsh in March. And I guess you take a hike from there. Is that the scenario that you're seeing?
Yes, maybe. I mean, sometimes there's no hard answers, and I don't mean to evade the question. And let me answer it this way. The bounce or the rally out of the December low, I think, is counter trend. We're in a window of opportunity for it to turn. If we get an intermediate term sell signal, then the risk factor goes up. And obviously then it's going to look like that window of opportunity, that it's, lack of better words, that the opportunity is biting, if you will, if we get that signal. So if I see a signal, then yeah, risk is up. And we very well could see the resumption of the higher degree decline if we get the signal. So that opportunity, that's what I'm saying, is this is an opportunity. If it bites, it's going to be risky.
We'll have more with Tim Cyclesman Wood right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZB. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's the outlook for precious metals?
Well, it's been back in, I think we've talked about this. Back in August, we had an intermediate degree low, and the counter trend bounce has been underway ever since. It's been quite the rally. The intermediate term buy signal in association with that low remains very much in force. Again, as with equities, we're at a window of opportunity for that bounce to possibly cap itself for a turn. And as we speak today, gold's down about $20 and silver's down 32, and there are some things there where, like I said, the opportunity is now for a possible turn. Does it bite? Don't know. But we'll see it. We'll get the signal if we get the signal. And then I think, ultimately that it's a counter trend advance. And the reason I say that is that, we had the evidence with regard to the higher degree 9-year cycle top, somewhere between 8 and 9 year cycle, 8 and 9 years. It's not exactly 8, or not exactly 9, I should say. And the last cycle, as we talked about, was actually a little short. But that all aside, the evidence suggests that we do have the 9-year top, so this should be counter trend. I think it's probably just a retest of the high, and then once an intermediate term sell signal comes, then the risk is going to be back on for precious metals.
Do you see certain resistance points, or are you just looking at cycles?
I'm just looking at cycles and waiting on the signal. It's like you got the green light until the light turns red. And, we've had the green light coming out of that low, and now we're looking for the red light. And when we get it, we get it. And then once we get it, then, it's a matter of looking at the cyclical structure and confirming whether or not it really is the turn. And the same with equities. We've had the green light coming out of that low. We think that it is, that we're on the right road based on the evidence that we have. And then once we get the intermediate term sell signal, we will, reevaluate the evidence, which will either confirm that we're where we think we are or that we're not. And so same thing with gold.
Copper and other industrial metals, they've had a nice little rise. Is that going to continue?
Pretty much the same as gold. I think it's counter trend. Silver is down about, I think it was 32 cents I saw earlier today as we were speaking. Same sort of cyclical rhythm, same opportunity. I haven't looked at lead, zinc, nickel, and some of those in a while. Just something I do watch them, but not closely. Looking at copper, I had this week copper had a tremendous move, but still the overall pattern is, if you look at it, we still had that intermediate degree low, and we still have the evidence of the higher degree top. So I think that it is counter trend.
We'll have more with Tim Cyclesman Wood right after this.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTC QB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's going on with crude?
Same thing. Intermediate degree low. Back in December, and we knew that it was, no surprise when it happened, was, expecting it, got the signal, like I said, got the green light, and it's still green, but we're at that opportunity there as well. And that's another indication or another kind of risk factor, if you will. I mean, everything's kind of converging at the same point here for an opportunity. And, again, does it bite or does it not? And every coin has two sides. Let me say that and explain what I mean. When you move to one of these opportunities and it bites, then obviously it confirms. That's a good thing, confirmation. But if it doesn't bite and the opportunity is lost, then that's confirmation on the other side of the fence, if you will. So if depending on what we see as we move through this intersection of or window of opportunity for these turns, it's going to confirm whether the higher degree cycle tops are in, and we really are going lower, which is going to, like I said, paint for a much riskier picture for pretty much all asset classes, or if we're going to linger a while and there's maybe a little higher degree cycle low that occurred in conjunction with these counter trend bounces, and it's going to, as you said, drag out a little longer. But overall, I think the topping process is still underway.
Tim, do you look at things like OPEC cutting back production or the lack of pipeline space in both Canada and in some places in the U.S.?
No, because ultimately everything, that's kind of the basis of technical analysis and Dow theory and any kind of technical analysis, but everything is baked into price. I mean, if they cut back production and that's bullish for price, then obviously it's going to affect price. So it's going to appear on the chart, which is going to affect the cycle, which is going to affect the statistic, which is, in that case, you get to a window of opportunity for a turn and you don't get the turn. So then you get confirmation that maybe you had a higher degree low and something else is going on, and vice versa. So no, everything is with that's, like I said, that's the basis of technical analysis. Everything is baked into price. And if you think about it, that's really true.
If the oil market does go down, do you have any numbers in mind?
I'm thinking if we're on track, and like you said, you have a piece of evidence, and you have to. It's kind of like this intelligence officer comes to mind. I saw one time. He said you get a piece of data, and it's a dot, and you get another piece of data, and it's a dot, and another piece, and it's a dot, and all the dots connect and draw a picture. And then at some point you get bad data, or it proves to be bad data in time. You don't know it at the time, but all of a sudden the dots don't connect, and those become outliers, and maybe it forms a little bit slightly different picture. But so that being said, what I'm saying is that at this point, it looks like there are some higher degree cycle lows due. We have a higher degree low in commodities coming due. We have a higher degree cycle low in equities coming due. We have, that expectation is out there, but you work the ends to the middle, and the lows that we saw in December were too early. But then we know that lows can occur early. Cycles breathe. So ideally, those lows should still lie ahead. So that being said, I think this is counter-trend in crude oil, to your point, and that we do go lower and make another push down into crude oil that should take us below the December low. Now, if this opportunity is lost and all of a sudden we start to see some outliers and evidence starts to suggest that, that the intermediate or that this opportunity was lost for the turn, then it may start to paint a little bit different picture, and then maybe we did get that intermediate and higher, the intermediate degree low in December maybe does prove to be something of higher degree. But at this point, I'm getting kind of wordy, but at this point, I think that is counter-trend, and I do think that lower prices in crude oil below the December lows are the primary count at this point.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. Questions for the show or our guests, like Tim, can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.